One thing that we did do when we set up the fund is we rolled down the proportion of capital gains that the fund receives as total income to the investors individually.
What was your biggest frustration with the capital gains tax? Anything there that you want to share about how that all went down?
Yeah. So we got 25% down and we took back a business note for 75%. So I guess in a way we deferred some capital gains that way and doing a note kind of stretching out the income. And so I think that's it. I mean, I remember you're asking me to kind of dig back a deep, but this was 9 years ago. We structured it with goodwill. I guess goodwill is the portion you assign to that is going to be ordinary income, and the portion you assign to the FF&E and things like that are capital gains. Is that?
Yeah, there's some stuff there. The biggest thing though, and you mentioned it, people do traditional seller carrybacks and they'll finance the buyer, and your scenario, it sounds like they put a 25% down payment and then you carried the 75. And it's neat because you get some short-term deferral in the tax because you haven't received that 75 yet, but eventually they pay you back and you pay the tax. The difference between what we do, which is the deferred sales trust, is it's still an installment sale, but the difference is you can have that note go for as long as you want. And you also have access to the capital the next day to go put it into a new business, such as a bequest or a real estate deal or a ground up development or stocks, bonds, and mutual funds. You can diversify. So you're not tied to that single person, right? And you're also not going to get paid off in a short period of time and owe the tax anyways. And so we call it the Netflix way of doing things, Martin, versus the old Blockbuster, right? And for those who want to learn about all of this, you can go to capitalgainstaxsolutions.com. That's capitalgainstaxsolutions.com. And we also have our free mastermind every Friday on the Deferred Sales Trust. Totally free, 10 a.m. Pacific Standard Time, 1 p.m. Eastern. And by the way, I'm coming out with my book, Building a Tax Deferred Exit Strategy, the proven playbook for unlocking your ideal wealth plan when selling any asset of any kind for yourself or your clients. And by the way, I know you're in Sarasota, Florida, and one of the gentlemen that's actually the first chapter of the book, you may have heard of him and may have seen him in some of the driving down the street, because I think that's where he resides, is a gentleman named Kevin Harrington from Shark Tank. Anyways, he's in Sarasota and he's in the first chapter. So any thoughts on anything I just said, Martin? Maybe it might be brand new to you.
Yeah, I think that's more on the brand new side. We, with capital gains, we experience capital gains on the note side when we receive payoffs. For the most part, all the interest income from the monthly payments that come in are interest income. So it's basically ordinary income. But one thing that we did do when we set up the fund is we rolled down the proportion of capital gains that the fund receives as total income to the investors individually. So what that means is about 25% of the income earned in bequest as a company is capital gains. So on the investors' K1 statements, 25% will reflect capital gains and 75% will reflect interest income. So it's a little bit of a tax benefit.
That's cool. That's smart, right? It's all about the structuring and the planning of all of these things, right? And so if you have $1 million net proceeds, $1 million gain on a deal, you qualify for the Deferred Sales Trust. But if you're structuring your deals, you always want to get with professionals who can help you structure your fund in a way, your deals in a way that can be the most tax efficient, right? Because it's not just about what you make, it's what you keep at the end of the day. And so your taxes are a big part of that. 30 to 50% capital gains, depreciation, recapture, depending on the asset, depending on what state you live in. So keep that in mind. Go to capitalgainstaxsolutions.com to get started on all of that.